Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September 29th. It's National Coffee Day. Cheers to you. My name's Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Anyway, having all that out of the way, let's get this on. We do have a lot of economic data to go over, some of it not as important as others, but I'll go over it just because there's some really good points to be had in them. We had German retail sales. If you remember last month, it came in at like negative 1.2. They revised that number up quite dramatically to a positive 0.6. This month's number, though, did come in slightly lower than expected at negative 0.4, expected to be a 0.5. So not quite a wash, but at the end of the day, we got a point lower on one side and then almost a 1.5 higher on the, or a little better than a 1.5 higher on the revision. So kind of pretty close to a wash, nothing really super exciting, but that revision kind of makes up for the lack of good data coming out again this month. And then we have French consumer spending came in at negative 0.3, expected to be a positive 0.2, so a little bit of a pullback there, and they revised last month's number down from 0.7 to 0.6, so just a slight downward revision there. And then preliminary CPI, Consumer Price Index, came in at negative 0.1, was expected to be a negative 0.2, so better than expected there. No revisions to last month's number on that one. Final GDP out of Great Britain came in at 0.3%, which is in line with what was expected. And then we also had the European CPI flash estimates year over year coming in at 1.5, slightly lower than the expected 1.6. Core flash CPI estimate came in at 1.1, expected to be 1.2. Then here in the United States, we had our own core PCE price index, which is personal consumption expenditures, and that came in at 0.1, expected to be 0.2, so slightly lower. Personal spending in line with expectations at 0.1%, expected to be 0.1%, and personal income came in line with expectations at 0.2%, but last month's numbers slightly revised down by 0.1%. Then here in the United States, again, we had Chicago PMI, which is Purchasing Managers Index, came in at 65.2, higher than the expected 58.6. So that's good for inflation in a sense, I guess, if you really like inflation. And then we also had University of Michigan Consumer Sentiment coming in line with expectations at 95.1, expected to be 95.3. All right, so that's about it. We do have some PMI numbers coming out of China that comes out later on today, and we also have a Fed governor speaking today, which is, these Fed governors are like talking to the scarecrow right now, you know, which way to go, and they're saying, you know, that way. So it's a little bit hard to read the tea leaves on these guys. I think that really what it comes down to is there's not the robustness in the economy, although I did see something where somebody was saying GDP here in the United States was almost at 3% or just slightly above that, but I haven't seen those numbers yet. I've just heard that through the grapevine. Anyway, so on to crude oil futures. They're continuing to slump. Yesterday we got back above that 23 fib level there. Settled above there, which was a win for the bulls as far as I'm concerned. Right now we are slightly below that, but this 9-day moving average is a struggle to stay above. That is the short-term indicator as to whether or not we are bullish or bearish in a sense, and as long as it stays above that in the short term, it is a bullish trend. So overall market trying to tread water right now above those two lines in the sand, if you will. I've talked about this. I think it's going to kind of bounce back and forth here for a little while and try and fill this in, but the one caveat to that is we're seeing drawdown in inventories on oil, but that has to do with a lot of the disruption that's been going on with all of the hurricanes hitting the Florida and Houston, things of that nature, major areas of imports, especially in the Gulf for that matter. But anytime the oil's coming from the east, they've got to kind of go around Florida in a sense, and with all of that disruption with those two hurricanes, that is going to disrupt that whole influx of oil into the Gulf region. So that's going to pull back on inventories there, but we're seeing that build in the distilled products like gasoline and jet fuel and the types of oil that would go into making plastic. All right, so on to gold futures. They're off a little bit today. Tried to get up above and look to test that 1300 area. I don't really see that happening. This fib level here is going to act as support, as it did yesterday. It bounced off of that quite robustly in a sense to the bull side, but today we're starting to see about a half back going on in that candle there. Bonds finding a little bit of support yesterday, stayed above the 200-day moving average. We're above that right now. They settled above that 200-day moving average. That's a pretty key line in the sand for the bulls and the bears. I think that, like I said, with all of the Fed governors talking like the scarecrow, I think we're going to continue to see this kind of settle down right in this, definitely within the value areas for the near term anyway, and probably get comfortable right here where the point of control is, which is a real strong magnet. It's where everybody's, or the most of the market has put their money where their mouth is. So anytime there's lining up with that value area, there's complacency, because people who are long aren't losing money and the people who are short aren't losing money. So it has a tendency to settle down in there for at least a short term. We've got the VIX here. I wanted to show this. It's down in single digits again and breaking below that low there. So if you're like looking at a chart, that's not looking too good. It looks like you might want to go down and test those lows that we saw of 850 or 884. So looking like you might want to go there. Dow Jones Industrial Average, we've got down just slightly on the day, albeit higher than where we opened, but it is still negative on the day. This value area high is going to act as resistance, but anytime these markets are up near these highs, we're going to start seeing the VIX start to slump off a little bit. I wanted to talk about the RUT because I haven't talked about it in a while, and I kind of mentioned it the other day, a couple of days ago, was a blast off. Yesterday started looking like it was getting a little toppy, but no confirmation to that today, with the market making another all-time high. Ring the bell, all-time high. That bell's getting worn out, by the way. Ringing the bell for all-time highs in the equities, for that matter. We've got the NASDAQ up on the day by 30 points. It's been kind of the lagger on all of these equities, as people have been kind of flying into other names other than tech. Apple has been one of the major, it is a major component in the NASDAQ. It is one of the highest weighted, I should say, companies in the NASDAQ. So anytime Apple comes off, you're going to see the NASDAQ kind of suffer from that. But tech hasn't been really as hot necessarily as consumer staples, or not even consumer staples, but blue chips, I should say. E-mini S&Ps, ring the bell again, all-time high. Yes, it is getting worn out for sure, to say the least, but a new all-time high of 25.1375, and that was printed inside of today's trading range. As you can see here, we are right there at the highs of the day, basically a quarter tick off of it, probably just printed again the highs. So that is a real number that people will look at. Anytime that trades overnight, we're not going to really put much weight in that all-time high, but when you have an all-time high in the day session, people really look to that number. So right now, printing the all-time highs up $5.75. All right, so this is the trade. You guys remember I did poor man's covered put in Caterpillar and poor man's covered call in Deere. What I done is when I put this on, I was looking for Deere to cover this gap here, and I was looking for Caterpillar to cover this gap. And they're kind of like Coke and Pepsi in a sense, where they are very similar in nature and will have a tendency to kind of follow each other. But Deere being more into agricultural farming and forestry, Caterpillar into industrial kind of things. But Deere is getting into that area, and Caterpillar is getting into the farming and agricultural area also. So they are similar. They do have their weights in different aspects of the economies, but at the end of the day, those gaps, I thought, Caterpillar had outpaced while Deere had fallen off, and was looking for those to cover. Now, as you can obviously see, the Deere trade is working out quite nicely. The Caterpillar, though, being trending sideways, not really doing a whole lot, I decided to roll out my short puts in there and try and get a little bit more credit, if you will. So in that, with the trade that I originally had done in there, I had done the January 135 puts. So bought the 135 puts and then sold the 120 puts to finance some of that extrinsic value of those long puts that I have on, and I paid $12.02 for that. Now, with the market not really doing anything, we've got theta decay happening in that front month, 21 days to go. There's not a whole lot of premium left in those October 120 puts. So I rolled the October 120 puts out to the November 120 puts. So, and I collected another $1.58 for that. So lowering my overall basis on that trade, decreasing my risk, and keeping that dream alive in a sense. So I'm going to have a short leash on this Caterpillar. I might pull that even before I do the Deere trade, if we really start seeing this get a little bit antsy to the upside in Caterpillar. With the economic data coming out, like the Chicago PMI, things of that nature, we might start seeing some of these type of sectors start to do very well. So I'm going to have a short leash on Caterpillar. I'm going to kind of let Deere run, as you can see, but no pun intended. But if you remember with the Deere trade, just as a refresher, I did the January, and I had bought the 112 calls in there, and then sold the October 125 calls. All right, and I paid $12.63 for that trade. So leaving that one on, that's a nice winner right now. As you can see, you got that move. Put that on like what was it? The I can't remember exactly. I think it was like the 25th or something like that. So it was right in here. Actually 925. So it was like right in here. Actually, yeah, 918, 919, I believe, because it was right on that big move that I put that on. So still kind of staying with this one, but I wanted to give you an update on that because I am rolling that out, staying mechanical with the Caterpillar and staying with my Deere trade as of right now. That's about it for today, other than this afternoon I'm going to talk about how to be mechanical with the strangle. This is how we're being mechanical with a poor man's covered put, and I talk about that in other webinars and things of that nature. But with this one, we're going to stay mechanical with the strangle, and I have a perfect example of one that I've had on for quite some time that I've had to be a little bit mechanical with it. I actually went back in my history and tried to find a couple other examples, but very difficult because I was actually winning. So this is the one that is the problem child, if you will, that has beaten the probabilities. All those other ones that I've been talking about were like, quick hits in a sense. So, but when we have one that goes against us, test our probabilities, that's when we start becoming a little bit more mechanical with it, trying to increase our credit, lower our risk. That's what I'm doing with Boeing, with ticker symbol BA. So I'm going to talk about that as a case study today. So it's going to be a really good one. Check that out. You can figure out all the rules, or I'll teach you all the rules in how to stay mechanical with something like that. You can't find this online. This is something that is a floor trader tactic in order to increase your probabilities of success. And I'm going to talk all about that in detail today. So go to protraderstrategies.com. Make sure you're signed up for that. Get in there early because we've been filling up. All right. So if you can't take that, take it easy.